Do you dream of an early retirement? I mean, lying on the beach, vacationing for months, sleeping in whenever you want. But I mean, do you picture this like this? Or like this? I'm guessing the first one. So today, I'm going to tell you what investment accounts you need so you can retire before you're an old woman. What is up, future rich bitches? Thank you so much for joining me today. I am so excited to tell you all about how you can set yourself up to retire early. But first, if you are interested in learning how to invest, build your wealth, and become a future rich bitch, please make sure to hit subscribe on this channel. I release a new video every Saturday so that you can get all the tips and tricks so that you can grow your wealth. Okay, so without further ado, let's get into it. So most people are only investing for retirement through their 401k, and that's fine if you want to wait until you're 60 to retire. But if you're planning on having the freedom to retire before that, your 401k isn't going to help you. Hi, yeah, excuse me. I actually have a question. Why won't investing in your 401k help you? I'm so glad you asked. So 401ks and other retirement accounts actually have age restrictions for when you can start to withdraw your money. And at best, this is at 55 and typically is at 59 and a half. So if you want to use the money in your 401k or other retirement accounts to retire early, they're going to charge you a steep penalty for pulling your money before you reach those ages, which you definitely don't want. So if you want to retire early, investing in your 401k is not going to cut it. You're going to have to up your strategy. The first type of account you should use to do this is a Roth IRA. And I know what you're thinking. Hi, excuse me again. But isn't a Roth IRA a retirement account? Well, yes, but Roth IRAs take after-tax contributions. And so that means that any money you contribute, you've already paid the income taxes on. Because you've already paid the taxes on this money, you can withdraw your contributions at any time. The problem is that your contribution limit every year is only $6,000. So even the most frugal people are going to have a hard time retiring on their Roth IRA contributions alone. So while you've already paid the taxes on your contributions, which allows you to withdraw them whenever you want, your earnings actually do have a tax advantage in this account, which complicates things. So your earnings in a Roth IRA grow tax-free forever. So this is a huge benefit. I mean, that means later, once you reach 59 and a half, you can withdraw these and pay absolutely zero taxes on them, which is great. Sign me up. But because they're giving you a tax break, they restrict when you can access those earnings. So that poses a problem if you're trying to retire early. So because you can't access your Roth IRA earnings in early retirement and living off of your contributions alone is going to prove to be pretty hard, then you're going to need another account type to supplement this. So the second type of account I suggest you open if you're planning to retire early is a taxable brokerage account. Unlike all of the other accounts that I've mentioned so far, taxable brokerage accounts don't provide you any tax benefits. So as we discussed already, Roth IRAs can grow tax-free forever, which is the tax benefit that they provide. And 401ks and traditional IRAs provide a different tax benefit to you. So when you make contributions to your 401k or a traditional IRA, those contributions are tax deferred, which means that you haven't paid income taxes on them yet. And what that does is lower your taxable income now when you're contributing to those accounts. And then later in retirement, when you withdraw your money from these accounts, you pay income taxes on it then. Because taxable brokerage accounts don't offer any of these tax advantages and any earnings you make within this account are taxed at the capital gains tax rate, they can be much more flexible with the amount that they let you contribute and with when you can make your withdrawals. So as we discussed, the tax advantages in retirement accounts mean that you have withdrawal limits in certain ages when you can withdraw your money. But they also limit the amount of your contributions. As we discussed in a Roth IRA, you can only contribute $6,000 a year that can grow tax-free. With a traditional IRA, it's also $6,000, and with a 401k, it's $19,500. In a taxable brokerage account, you have no contribution limit. So you can contribute as much money as you want, whenever you want, every year. So that's a huge benefit because the earlier you can start making these contributions, the more time they have to grow, and you can let compound interest work. And as we know, compound interest is your BFF, and the longer you let it work, the more your money can grow. So being able to contribute a lot early will really help your chances for early retirement. So since you can contribute as much as you want, this should help you reach FI early, and then you can take advantage of the other flexible benefit that they offer, which is that you can withdraw your money from this account whenever you want. So once you hit your desired amount, you can just start withdrawing your money and go ahead and retire early. So there are a couple different types of brokerage accounts that you can open. And what will determine which account is best for you is how involved you want to be with the management of your investments. So the first type of taxable brokerage account you should consider opening is an online brokerage account. And these are great if you want to be heavily involved in the managing of your investments. And within this account, you can buy and sell stocks, bonds, mutual funds, and all other sorts of investments. But it's important to remember to maintain your long-term investing strategy. And with a long-term investing strategy, you buy and set a well-diversified portfolio of assets and you let it grow for decades. You don't try to beat the market and buy and sell hot stocks. But with the increased flexibility you have with this account, that can become really tempting. But don't fall into this trap. Many studies have shown that traders rarely beat the market. So no matter how many people on Instagram are telling you that they're up 1,000% this year on their trades, they're not. They're lying. Don't fall into this trap. Keep and maintain your long-term investing strategy even in your new brokerage account. So an easy way to maintain your long-term investment strategy in your brokerage account is to build a portfolio that mimics a target date fund that you have in a retirement account. So I am a huge fan of target date funds. They're so great because you just select the fund that's appropriate for your age and it manages your risk level and your asset allocation over time for you, so you don't have to do anything. But target date funds might not be available to you in a brokerage account. So if they're not, you can mimic those holdings in a target date fund in your brokerage account. And so you do that by going into the target date fund in your retirement account and looking at what holdings are within that target date fund. So it will probably have some foreign and domestic stock holdings and some bond holdings. So then you can go find comparable index funds and ETFs that are offered in your brokerage account and select those funds. After you've chosen your comparable funds, then you're going to allocate your money at the same percentages. So let's say in your target date fund, you have 90% invested in stocks and 10% invested in bonds. In your brokerage account, you're going to allocate your money the same way, 90% in stocks and 10% in bonds. So this allows you to set up your portfolio with a long-term investment strategy in mind and maintain an appropriate level of risk and a diversified portfolio super easily. What's really important to note is that target date funds are going to do all of your portfolio management for you. And if you've been investing in something like that, you may not be used to going in and managing this on your own. So you're going to need to regularly go into your brokerage account and then realign your asset allocation and make sure that you're maintaining your 90% stock and 10% bond ratio, and also that you're managing your risk over time. So if all of that sounds like a lot of work to you and something that you just don't want to get into, then a managed brokerage account could be for you. And one segment of this that has been growing rapidly recently is robo-advising. So these advisors use sophisticated algorithms to manage your money. And the biggest benefit of robo-advising is that you can get all of the same management services as traditional accounts, but you get it at a much cheaper rate. So if you're uncomfortable with the thought of computer code managing your money, that's also fine. You can get a human advisor instead. And while these are a little bit more expensive, then you will be able to get that hands-off advising and management strategy that you're looking for, but you're just going to pay a slightly higher fee. A really big key before you hire someone to manage your portfolio is that you need to make sure that you understand completely what their fee structure is and that you make sure that they are a fiduciary. And that's because fiduciary financial advisors are legally required to make decisions that are in your best financial interest. So you don't want to be stuck with some extra fees that you didn't understand that are going to eat into your returns later, and you definitely don't want somebody to be making decisions that could benefit them and not you. So definitely, if you're going to hire a human advisor, make sure that you understand both of those things before you choose who to hire. So if you're still unsure which type of brokerage account is best for you, you can look at what kind of management you're doing right now. So let's say in your retirement account, you're like me and you love target date funds because you just like don't have to do anything. Well, then it might be worth it to just pay slightly more and not have to be involved in your investments at all. And then if you like to go in regularly now and check your investments and maybe manipulate your portfolio sometimes in your retirement accounts, then it might be beneficial to save on that advising fee and do the work yourself. But I would look at what management style you like right now and make sure that you stick with that if that's something that you enjoy. While I think it can be tempting to try to avoid that advising fee, if you're not going to go in regularly and make sure that you're maintaining your asset allocation and actively reducing your risk over time, you could end up putting yourself into a risky situation and losing money, which you don't want to do. And in that case, it's probably going to be worth it to just suck it up and pay the fee. So a lot of people are investing heavily into their 401ks and IRAs to make sure that they can retire and reach financial independence. But the problem is that unless you want to wait until you're 60 and an old woman, then you're not going to be able to use the money in these accounts because of their withdrawal restrictions. So if you plan on living that retirement dream, walks on the beach, hitting snooze as many times as you want, then it's going to be really important for you to start broadening your investment strategy and investing in a Roth IRA at minimum and a brokerage account if you really want to retire as early as possible. So I hope this helped you understand more about how you can retire early and what you need to do to get there. So if you like this video, please make sure to hit that like button. It really helps me with the algorithm, and I want to be a rich bitch just as much as you, so I would really appreciate it. Again, make sure to subscribe to this channel if you want to learn more about investing, building your wealth, and how you can become a future rich bitch. I release a new video every Saturday that tells you how to do just that. And thank you so much for tuning in. I hope to see you soon. Bye.